Hello again, this is Alex Rifkin of Rho Labs, the developer of Rho Protocol. Today we're going to talk about the way we can start trading on Rho. So we're going to start from connecting the wallet and placing our first trade, and then seeing where we can find this trade in our portfolio and how we can manage the margin associated with this trade and a few other things. So for starters, let me connect my wallet, right? This is the interface for those of you who have seen the previous video when we were going through the interface. This is the same trading interface. And today I'll probably let me start doing things on the mainnet. Hi again, this is Alex Rifkin. I'm the CEO and founder of Rho Labs. We are the developer of Rho Protocol. Hello again, I'm Alex Rifkin, founder of Rho Labs. We are the developer of Rho Protocol, the non-custodial interest rates trading venue on Arbitrum. So for those of you who have seen the previous video, we went through the key elements of our interface. Now we got to start from connecting our wallet and placing our first trade. And after we place the first trade, we will try to go through what is now available to us, the position management, margin management, and a few other things. So for starters, I'm now on the mainnet interface of our app. And now I'm going to be placing real trades with real Arbitrum funds. Let's start from connecting our wallet. So as you can see, this is the mainnet market. Arbitrum 1 is the network, which is the main network on Arbitrum. I will be connecting the wallet. I'm not sure if you're going to see my MetaMask, but basically I've selected an address. This address has already been approved for usage with our smart contracts. If you do it for the first time, then your MetaMask will pop up, and the first thing it will ask is to approve your spending, which is like the basic mechanic for those of you who are not doing DeFi trading every day. You can set the limit of the collateral you envisage placing with Rho and click approve. You will sign the transaction, following which you will actually go to the actual trading flow. It's pretty simple and standard, and most of you would probably be familiar with it. Now, here I went through the approval already. So now let's say I want to deposit some margin. I'll click the deposit button over here on top. Since I do not have enough margin, the interface, the trading floor will also tell me insufficient margin, and I will be able to deposit some collateral here. I'm choosing the market that I want to place it with. If you remember from the previous video, we were talking about the margin being available for multiple maturities within the same market, so within the same risk. For example, if I want to trade multiple maturities for BTC USDT perpetual future funding on Binance, I will only need to place the collateral once. Here, specifically for this market, for this video, we just opened two markets essentially, and one instrument in each, but essentially there could be three or more. There could be any number of maturities for the same pool of collateral within the same risk. So if you see on the deposit form, I will only need to choose the market, right? Not the actual instrument I'm trading. So because we want to trade the same instrument, the June BTC USDT per funding one, I'll pick this market. Notice as well that we have this cross-chain deposit feature here, which I will touch on a little bit later. But for now, I want to deposit, let's say I got 2000 USDT in this wallet, so I will deposit 1000 USDT, right? I can also choose 50% here. I got obviously a little bit more than 2000. This is my actual balance. But I'll place, let's say I'll place 1000 sharp. So I'll deposit it here. Again, my MetaMask is popping up. Not sure if you guys can see it. Actually, now I'm being asked to do an approval. Sorry, I thought this wallet is already approved. So I'm confirming that transaction. It happens very fast. We're waiting for just very few confirmations in Arbitrum. And then I'll have to sign the actual deposit transaction. And then I will have to wait a little bit. There you go. So I've successfully deposited 1000 USDT to this particular market, and I can see this transaction in the Explorer. As you can see, it all happens super, super fast. That's one of the advantages of being on a layer 2 network. So now I want to trade, right? So you see that my current margin here is now 1000 USDT. I have the account value here. It's apparently USDT, I think, is slightly cheaper than 1000, but it's around about $1,000. This tab on top shows you the dollar value of your collateral. So I got 1000 here, 0 there. That's my total amount. I can always, by the way, deposit more, or I can withdraw. all the available collateral. Any available collateral will go through the withdrawal sequence as well, is the collateral which doesn't support any existing positions. I can also transfer collateral to another market, right? So if I want to start trading Ethereum for more than for some parts of my collateral, I can also transfer the collateral between the markets. I'm not going to do it now. It's pretty simple, very similar to a deposit. If I want to place $500 in the Ethereum market, I can do it just from here. Going through with a trade, right? So let's look at the market right now. So we see that the floating rate sits at about 10.95%. The current rate on Rho is slightly higher than that. There's probably good reason for that, but let's imagine that for whatever reason, I feel that the rates are gonna go even higher. So if I feel that the rates are gonna go even higher, same as with any other instrument you're trading, I just have to go long, right? So I will profit if the rates go long. There is a specific nomenclature for going long or short in rates trading, which is basically being a payer or receiver in different contexts. For now, all you need to basically be concerned with is that if you think the rate is going up, for example, which is one of the use cases, just have a view and you want to express it, you can go long. If you feel that the rate is more likely to go down, you can go short. That's as simple as that. Let's imagine in my scenario, I feel that the rates are a little bit, is underpricing the rates a little bit. And the rates are likely to continue going up. So for example, I think that from current 11.96, I can realistically see a higher average rate till the end of June. So I want to trade this June instrument and I want to go long. How much can I go long for is determined by the amount of margin I hold, the amount of liquidity current present in the market, right? So our market is AMM based, and the price that you're getting is going to depend on the liquidity that the liquidity providers are placing on the protocol, but it's generally quite liquid for majority of sizes, definitely for a majority of individual traders and for professional use as well. And so let's say for starters, this is my first trade, probably don't want to go crazy. So let's say with my $1,000 worth of margin, I want to go long for $10,000, 10x leverage. So the market immediately shows me a few parameters of my prospective trade, right? I will refresh those later before I'm doing the actual trade, but let's just go through them, right? First of all, I got this leverage here. So I can, as I showed you, I can choose the notional of $10,000. I can also use the slider to adjust the notional. For example, I want to go from 10,000 to, 20,000 bucks, right? I can also use the leverage field and say like 15x actually is what I'm going for. I can also choose the side using just the slider, right? I can go like, okay, I want to go short and I want to go 20,000 short. Or for example, I want to go long, right? I can choose a different parameter, choose a different direction here, or I can just take a slider and drag it all the way to, let's say, what was that? 15x, 15 and a half, like 14 and a half long, for example. You can also see that if I'm choosing the notional, let's choose the notional of 20,000. So you can see that with 20x leverage and on my $1,000 margin, I can do the $20,000 trade. And I immediately can see the prices that I'm likely to get if I place this trade. So right now, if you press the button, then my resulting rate that I'm gonna trade at will likely be 12.1% if I go long, or 11.92% if I go short. You can also see the detailization of that here at the bottom. So you expect the trade rate here is about 12%, right? 12.01 with 12.0083. You can also see the estimated liquidation rate. So reminding you, this is a leverage product. This is a derivative, so it's a leverage product. You're depositing collateral and trading on leverage. If you remember from the previous video, I was talking about how high leverage is high and needs to be treated with caution, but it's not actually as crazily high as it might sound, right? So for example, right now, when I'm trading on like 20x leverage, you see my expected trade rate is 12%. Estimated liquidation rate, which is what should the market be at for me to potentially be at risk of liquidation. So the market has to go to minus 47%, which I do not really think that Bitcoin perps funding have been at for a very long while, maybe ever, if we're talking about Binance. I'm not entirely certain about this, but the likelihood of this event is, I'm confident saying, not very high, right? So how impactful this leverage is going to be on my P&L, we'll talk about it in a different video. But at least for me to be at risk of liquidation at this 20x leverage, it is actually a relatively safe bet in respect of that liquidation risk. If I start going high with this leverage, right? Like, for example, I want to go to like 50x. You can see the impact immediately, right? So if I go to, let me just set it here to 50x, my estimated liquidation rate is already at minus 11%, which is still quite low, and we haven't seen a lot of those lately, but at least that is within the realm of probabilities, let's put it that way. If I continue pulling the slider and I go like all the way to 90x, then the estimated liquidation rate is minus 1%. So that definitely can happen. Happened very recently. If you look at the floating rate chart, let's actually look at the floating rate chart here. If we go a little bit further back, you can see that the rate has been, the floating rate at least, has been at round about minus 2.5% recently. Our rates didn't reach that value because our rate is forward looking. We'll talk about it separately. So our rate is representative of an average rate that investors expect and not just the floating. But still, the minus negative 1% rate is something that we can actually see in crypto consistently given certain market structures. So you can see how leverage is actually high, but probably not as high as you expect it to be on many other markets. If you're going 20x long on reasonably small collateral with an adverse market move, you can actually get liquidated very fast, sometimes within hours from when you're trading. So having went through this, we will also, by the way, this P&L calculator feature is something we're very excited about, and we will deploy it soon, and I'll make sure to create another video on that front as well. Now let's try to place that trade. So again, I'm just pushing trade. I'm signing the transaction on my MetaMask, confirming it here, and the trade is done. You see, so we're now long 20,000 of Binance BTC USDT perpetual at some kind of a rate. And you can see transaction on the RBScan Explorer. And let's go to and see our position now in the open positions tab, right? So here is my position. So Binance BTC USDT, maturity in June. I'm long 20,000 USDT, and the leverage is 20x. I already made some moderately positive P&L. And there is also something called DV1, which is analogous to its version of Delta, which we will cover in a separate topic.